Hey Bowtie Nation, Joseph Hogue here with one of the most popular themes on the channel, monthly dividend ETFs. For my money, there is nothing better than a diversified, lower risk fund that is going to put cash in your pocket every single month. The problem is how to find that best dividend ETF. There are more than 600 funds paying monthly. Where do you even start with something like that? You can start right here. Now, we have talked about some of my favorite funds on the channel before, but for this video, I wanted to rank the top 61 monthly dividend funds, show you how to pick the right ETF for your goals, and get that cash flow now. Here, I'll be ranking the funds in 5 categories: highest dividend yield, highest returns, the best fund for stocks, the best for bonds, and the best overall ETF. So make sure you stick around for that. And let's start right now with the ETFs producing the highest total return over the last 3 years. I'm going to show you the top 10 right here, but stick around and I'll share the entire list of monthly dividend funds at the end of the video. Here, I've highlighted the top 5 funds by 3-year return, with Credit Suisse Silver Shares Covered Call Note, ticker SLV, taking the top spot with a 6% annualized return. Now, that might not seem so great, but considering the average monthly fund lost 0.8% annually over the last 3 years, that 6% return plus a high yield is pretty darn good. Next here, the Gold Shares Covered Call Note, ticker GLDI, ranks second on the list, though these do have the higher expense ratios on the list, so we're going to talk about that in a minute. That's because these ETN products are much more management intensive, along with that covered call strategy where the manager is constantly, every month, selling those call options to collect cash flows for the dividends. Both of those commodity ETFs did so well last year because gold and silver prices really didn't go up or down much, though they were extremely volatile through the year. Now, that volatility meant the managers collected higher premiums when selling those call options and didn't lose anything on the commodities compared to those ETFs invested in tech stocks. These were also some of the highest yielding funds, so expect to see them in other categories as well. Here you also see a couple of those high yield bond ETFs having not fallen so much in last year's sell-off. The Invesco Bullet Shares 2025 and 2026 ETFs. Now, these are short-term bonds, so the prices haven't been hit quite as hard on that rise in interest rates. And we'll get back to ranking those monthly dividend payers next, but notice here I'm not highlighting every single monthly ETF. I'm going to show you the data on those 61 ETFs I did research later, but there are actually 612 dividend funds out there. But honestly, folks, there are a lot of crap ETFs that I wouldn't touch with free money, let alone your hard-earned cash. Narrowing down that list of 600 plus dividend funds, I looked for 4 criteria, and I wanted to share that because it's a great start to narrowing down really any list of ETFs. Now, first, the fund had to have assets under management, or AUM, of at least $50 million. Now, I've got nothing against new ETFs. It takes some time to raise those funds. The problem here, though, is if an ETF hasn't grown to at least $50 million in assets over the first few years, the fees collected just aren't going to be enough to pay management, and there's a good chance that that fund gets closed down. Now, you can see here, the number of ETFs closed has been rising each year for the last decade, and the bear market this year just means hundreds are going to be liquidated. When that happens, the fund manager sells the assets and returns that money to investors. So it's not a total loss, but just sucks to have to find another fund for your money. The next criteria I used was an expense ratio under 0.7%, but understand even that is really high compared to some of those Vanguard or Fidelity funds that charge you just 0.1% to hold your investment. The reason why many of these are higher is because they're more actively managed, and it costs more to manage those monthly dividends rather than just a normally quarterly one. Now, that said, I still wouldn't pay more than about 0.7% expense fee for even the best of funds. Now, one criteria you might not use with all your ETFs, but definitely for this one, a dividend yield over 5%. Now, monthly payers offer some of the highest dividends in the market, so why settle for anything lower than the best? I also looked for at least 2 years of trading or 2 years of history since inception in the ETF. There has been an explosion in exchange-traded funds over the last 2 years, and a lot of these managers just aren't time-tested. I wanted to narrow the list down to only those where we've got longer-term data and returns on those dividends. What we got is a best of the best list of 61 monthly dividend funds to rank. Next here, I want to highlight the best dividend funds for stocks, those dividend stocks with the highest returns and yields. Even here, where we saw that bigger loss last year on that stock market crash, you still have some of these funds that produced positive overall returns and really great dividends over the last 3 years. In the top spot, we find the Global X Russell 2000 Covered Call ETF, ticker RYLD, with its 12.4% dividend yield. Now, this is one of the most popular covered call funds, holding stocks in its group and then selling call options against that for that monthly cash. Now, to tell you the truth though, among these covered call stock funds, I kind of like the JP Morgan Equity Premium Fund, that ticker JEPI ranking here in the 5th spot a little better, just because it held up so much better last year, where a lot of these funds fell 10% and more, and where the overall market dropped nearly 20%. That JEPI fund only lost 3% and still was able to produce an 11% dividend yield. In between here, you've also got the Global X S&P 500 Covered Call ETF, that XYLD, with its 12% dividend, and two other funds here, one by Fidelity and one by JP Morgan. Now, those JP Morgan ETFs are managed very well, which is why you see those better returns when the rest of the market crashes. They've also got some of the lowest expense fees on our list of monthly ETFs, which is always a big plus in my book. Now, you will notice I've ranked the NASDAQ Covered Call ETF, the QYLD, 9th on our list here. I know there are a lot of QYLD fans out there that probably disagree with me. The fund pays one of the higher dividend yields on the list, but I just don't like how much the price has fallen over the last few years, especially against some of those other monthly ETFs and against the market itself. Even this year, with bonds falling on those higher interest rates, you don't want to totally avoid bond funds, so here were the best monthly payers for bonds. The dividend yields might be lower for these, but you cannot deny the returns on these bond funds. All 11 monthly payers here are up on their 3-year annualized return and lost a fraction of what stocks did last year. Here we've got those Invesco corporate bond ETFs again, and again, the reason why these did so well is because they're short-term bonds. Bonds with those near-term maturities aren't going to fall quite as much when interest rates rise, so you still get that yield, but also the protection in the markets like we saw last year. You've also got a senior loan ETF there, which is going to be those bank loans to lower-rated companies, which is what you see in these high-yield bond ETFs as well. Now, these high-yield bonds, sometimes also called junk bonds, are debt issued by companies with those lower credit ratings. So to attract the investors, since the credit rating is lower and the risk of default is going to be higher, those companies are going to offer the higher interest rate on their bonds. Even these higher risk bonds, though, especially in the bonds that you find in that SPDR ETF, the ticker SJNK, these still have extremely low default rates, less than 3% of the portfolio. So it's not like you're investing in some really risky company bonds. One thing you do need to watch out for investing in these high-yield bond ETFs like the JNK or like the HYG is the prices of these bonds tends to follow stocks a little more closely than other bond funds. Basically, with an economic recession, you get a higher risk of bankruptcy at these lower credit rating companies, so the high-yield bond funds might drop a little bit more in a market crash, but are still going to protect your money from the worst in stocks. We've still got the best funds for dividend yield and the best overall monthly dividend ETF, but I've got to send that special shout out to all you out there in the nation. Thank you for spending a part of your day to be here. If you're not part of that community yet, just click that little red subscribe button. It's free and you'll never miss an episode. Even I was surprised how high the yield went on some of these funds. Here are the top monthly payers ranked by highest dividend yield. Again, here we see the Silver Shares Covered Call note at the top with a 16.5% dividend yield, though that's not guaranteed going forward. You see, the dividend on all these covered call funds is going to depend on the volatility within the investments. So how much those prices rise and fall has a big effect on how much the portfolio can collect when it sells those call options for income. If the price of silver settles a little or even falls, then this fund might have a hard time duplicating that 16% yield. One of my favorite dividend payers here is the Global X Super Dividend ETF, ticker SDIV. It offers the second highest yield in the group at 14.5%, but has been hit with those price losses over the last few years. In fact, last year, it lost more than even the NASDAQ Covered Call ETF, that QYLD, which is a fan favorite, but also underperforms the market on a return basis. If you are looking at returns here, though, there are a few of those covered call ETFs that have done well on the price and still offer some of the highest dividend yields. You've got both the Russell 2000 ETF, ticker RYLD, and the S&P 500 ETF, ticker XYLD, in the top 6 here, with yields of 12% and higher. Nation, what it comes down to is you're going to have to make your own decision on which is best for your portfolio. Something with a higher dividend, but maybe price losses, something with a higher return, or maybe a combination of the different factors. I'll reveal those best ETFs for monthly dividend payments next, but the only thing better than a monthly cash flow is dividends every week. Check out the video here for a list of 12 dividend stocks that will put cash in your pocket every single week. I'm going to show you the full list of 61 monthly dividend ETFs next, but 3 of these funds really stood out as the best overall. I ranked these on a combination of all the criteria together: high dividend yield, price return, and that lower expense ratio. In the number 1 spot here, we've got the JP Morgan Equity Premium ETF, ticker JEPI, with its 11.3% dividend and relatively mild losses last year. I also like the Global X Super Dividend ETF, that SDIV here, and included the Super Dividend REIT fund as well. It only offers an 8.1% dividend, but I do like the exposure to real estate stocks you get with this one, making it a great addition to a portfolio of stock funds. Here you might also check out the Schwab US TIPS ETF, ticker SCHP, investing in those Treasury inflation-protected bonds. If inflation does turn out to stay higher than expected, this fund will continue to outperform like it did over the last few years, and the expense ratio is one of the lowest you'll find. Within the top 10 dividend funds, though, you've got a lot of those popular names like the QYLD and the NUSI. Let me know in the comments if you think another fund should have been included or which monthly paying ETF you like the best. And here's that list of all 61 monthly dividend ETFs, and I've ranked these by dividend yield, but don't just focus on that. You can see here, some of the highest dividend yields have lost the most money this year and over the last 3. You've got some great funds here, some that have held up and beaten the market over the last year. As you scroll down, you start to see more of those monthly bond and alternative asset ETFs that, while they do offer the lower yields, have also helped to diversify away some of that stock risk. For example, we didn't see that multi-asset fund ranking on the list, but the MDIV here is one of my favorites, spreading your risk across different asset types, and only down 3% this year. Besides protecting your money, some of these more passively managed funds also come with much lower expense ratios, like that iShares High Yield Bond Factor ETF, charging just 0.35%. The further down on the list you get, you start to see more of these emerging market and high yield bond ETFs. Now, I am not a fan of the EM space for stocks or funds, but don't neglect those high-yield corporate bonds for a strong yield and return. What's better than monthly dividends? Click on the video to the right for a simple 12-stock portfolio that pays you a dividend every single week. Constant cash flow to pay your bills. Don't forget to join the Let's Talk Money community by tapping that subscribe button and clicking the bell notification.